Hey folks, welcome back to Real Estate Investing Unmasked. Today I want to talk about points. So what's a point? What's the point? What is a point? When it comes to mortgage lending, what is a point? A point is a way for you to pay your mortgage lender to lower the interest rate. When you're in the process of purchasing or refinancing, in the process of getting a loan, and you see they have a certain interest rate and you want to get it lowered, the way that lenders typically will lower that rate is by offering you a buy down. Now that buy down, those discount points or that buy down is called a point or points. And the way it works is every point that they ask you for is equal to 1% of the loan. Now, that doesn't mean you'll lower your interest rate 1% for every 1% of the loan you pay. As an example, easy numbers, $100,000. 1 point would be $1,000, which means if your lender says, I'll give you a 5% loan, and you're like, and they say, well, for 5 points, we'll knock it down to 4.75. You're like, for $5,000, you're going to knock me down just 0.25%? Sounds like a lot. It may be or may not be. It depends on what the market's doing at the time. They may say we only need 2 points to mark it down 0.25%. They may say we need 10 points to mark it down to 0.25%. It really is dependent on the lender. So if a lender is asking you for points, what they're saying is you have to come up with money up front, or it could be coming out of your loan to buy down your interest rate. What you have to do is you have to do the analysis. If I'm going to hold on to my property long term, how long will it take for me to pay off those points? Because those points is just pure profit into the pocket of the lender. So let's say, for instance, they want to charge you $2,400 for an interest rate drop that will save you $100 a month. Well, $100 a month into $2,400 is 24 months or 2 years. So if you believe you're going to stay in this property for more than 2 years and it's going to save you $100 a month, it could be worth it. Most likely it is, because your 25th month, you're already in the black $100. Now, if it's going to take you 20 years to pay off the points, it's not worth it. There's no need to do that. You might as well be paying down the mortgage. And a lot of the refinance analysis that people have been doing when they say, hey, should I get my rate lowered, has all been based on what does it cost me to refinance my house? Is the mortgage payment going to come down, maintain the same amount of time on the mortgage? So if I've been paying for 10 years on a 30-year mortgage, I want to redo another 20 years. If I can bring down the interest rate, how much is that going to cost me? If it's going to cost me enough points, remember, enough percentages of the amount that I have left owing on my mortgage, if it's going to cost me enough points that the savings of $100, $200 a month is going to take me over, say, 7, 9, 10 months, it depends how long I plan on staying there. If you're planning on staying there for 5, 6, 7 more years, or even the whole 20 years, it'll probably make sense to refinance it. You just got to do the math. And every single lender will help you do that math because they want your business. They know those points is money in the pocket. So if you have any questions about points, please ask down below. There's no real number on what's appropriate or inappropriate other than what you think fits within your wallet or what's going to be taken out of your wallet. But if you have any questions, ask me down below. Feel free to ask me. I'll answer you as best as I can. And don't forget to subscribe, and I'll see you next time.